Hello everyone, today I'm going to show you a profitable trading strategy using just one single indicator, and that's average true range, ATR. So let's have a look how does it work. So ATR stands for average true range, and using the Investopedia, just have a look at this definition. Basically what it does, it captures the market volatility, and how does it do? It calculates basically the true range of a particular true range between a certain period, and the default periods is a 14 days. So you can calculate ATR easily using Python libraries, or in the MetaTrader you have the functions there. So we can go ahead and learn how does it work. Let's see how it can work, and I explain it using the trading view. And let's choose a an equity, or first let's go and pick a Euro USD. Okay, and by default you might have a bar chart or the candle chart. But to understand how this strategy can work, use Renko chart, because the way the Renko chart works, it calculates the ATR. By default is size of 14 periods, and it's not a time-based chart. As you can see on the bottom, the periods are not uniformly scattered on the x-axis, but actually it's based on the volatility of the market. For example, let's look at some data say here. On this point, it's a Thursday, 30 July 2023. And if you look at the next break or next bar, next break is 27th of July. Yeah. And then the next week is 2nd of August. So days are not uniformly distributed on the x-axis, because it is based on how the market moves in a particular period. And if the market moves from a certain, based on this number, so ATR for Euro USD is 0.008. So maybe it's easier to understand if we have a look at another equity, let's say Microsoft MSFT. Okay, for the MSFT, the ATR for the 16 period is 6. So that means if we are on an uptrend, so every new brick will be formed when there's a change in the value of the stock by this difference. So let's have a look. What was the price here? On 11th of June, the highest value is 384. And to get the next break, the price has to move to 390. So let's have a look. The next bar is, you see, the price has moved to the 390, and that's when you get a new break. And from 390 to get the next break, the price must move to the 396, and it doesn't matter how long it takes. So like the previous break was maximum reached on Thursday, 11th January, and the next one is reached on 16th of January, and the next one, the 396 price, achieved on 19th of Jan. So the dates are not uniformly distributed, right? And as you can see, currently the price is pushing up, but then it can go down as well. So let's have a look how a red brick formed. For the red brick to form, basically the trend has to be reversed, and it has to be reversed twice the amount of this number. So basically, for this break, the price reached to the highest by 354. So to get to this break, the price must come down 354 minus 12. The price must be go down to 348. No, sorry, 342 to make this reverse trend and a red break. So that's how this type of chart, Renko chart and ATR work. Now, after understanding this chart, now let's have a look. There are very nice trends using this chart. So we can, just based on the ATR, we can make a very profitable trading strategy. Most of the time, as you can see, we have a long trends, and very few times we have the trend on the other way. And the strategy I'm going to tell you, it will be based on 15 minutes, not on the daily time frame. And if we're going to go to the lower time frame, like let's say 15 minutes, on the trading view, you can't. It asks you to upgrade your plan. But what then we can do, we can go to another website called Investing. And Investing allows you to, even for free, go down to 15 minutes or 30 minutes. So let's have a look at Investing. The chart is opening up. Let's make it the full screen. Let's change to the bar chart. Let's make it to the full screen. 15 minutes. Now you can see on the investing website, we can go down to 15 minutes even on the Renko chart. And on the 15 minutes, you see there are very nice trends going up and down. So that's what we're going to leverage on. So the strategy goes like this. Whenever you have a reverse trend, for example, on this red break, whenever your trend gets reversed, you will go into the trade here. Whenever this break gets formed, you will, because this is a green break, so you're going to buy it. And your stop loss will be lower than this red break. And then you keep moving your stop loss. So you see you can make profits on quite a few breaks, 1, 2, 3. And then you're going to hit your stop loss here. And then you go into the trade here. You're going to make 2 breaks profit. And then you stop out. You will go into the trade again here on this one. You will go and make some profit. You get a stop loss on these 2 occasions. And then on this one, you will continue to make a profit until you get this break where you stop out. Then again, you make your profit. So you can see using this strategy, there are more opportunities to make more profit because these weeks are longer than when the trend gets reversed. So that's how this strategy works. You can try doing that back testing. I recommend you don't start doing the trading straight away. You can back test this strategy using Python or the MetaTrader or the other back testing methodology that I've explained in my other videos. And you can let me know how did you go in the comments. Thank you. So see you in the next video.